Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Today is the 31st of July, the last day of July, the last day of the Canadian crop year. So let's get into what happened in markets today. Canola ended up down $1.20 a ton, which was actually considerably better than what it was at the beginning of the day, settling at 695.40, still struggling to stay above the 700 mark. Minneapolis wheat was up about 1.25 cents at 601 and a quarter today. Kansas wheat up 4.25 at 426 and a quarter. Chicago wheat was down half a cent at 523 and a quarter. Soybeans had a bit of a bad day today, down 6.5 at 989.25. That's against the November. We'll talk a little bit about that $10 psychological level that we talked a little bit about this week. Soybean oil was down $1.30 or a cent, 1.37 cents at 54.74. Corn was up 2.25 today at 3.94. The Canadian dollar was down another 12 points at 72.19. Live cattle were down pretty big today, down 6.57 a hundredweight at 223.15. Same with feeder cattle, down 7.57 to 331.37 per hundredweight. All right, we're going to get into the Fed first because I think that's pretty topical and I think that's pretty interesting because it does have an impact on grain markets both in the US and in Canada. This is the US dollar index. It has risen to over 100 points now just in the last few days. Yesterday actually traded higher, considerably higher right out of the gate, like at the open prior to even the USDA or sorry, the Fed announcements. Ended up close to where it opened at with a big kind of hammer formation there, but on the way up. We saw some follow through today, ending again above 100 points. So the Fed meeting definitely was bullish towards the US dollar index. In fact, I think the market was a little bit surprised that Powell left rates steady. I think that was relatively built into the market. But he also gave no hint of a September rate cut. So he's been getting a lot of pressure from POTUS or from the President Trump. He even had two Fed members dissent in this meeting. And there's just a lot of pressure on Powell, but he stayed fast in his conviction that the economy is good, which we have seen some good data, that inflation still needs to be under control. We've seen that kind of data as well. So it's hard to argue against Powell, but there is a lot of pressure on him to cut the rates. I do think that there's some people who are saying that they're calling for the fact that Powell may have delivered his last rate cut, even though today's or yesterday's announcement wasn't a rate cut. So I think his job is on the line, and I think it could be an interesting few weeks or month when looking at the Fed prior to the next Fed meeting to see what the president does and if he has the power to do that. So we're going to keep our eye on that. Of course, the rising Canadian dollar does hurt U.S. denominated grain prices. The lowering of the Canadian dollar does actually positively impact a lot of our markets. It tends to keep canola futures elevated. It tends to give a little bit of a lift to, again, U.S. denominated futures or grains that are denominated in U.S. futures but are traded in Canadian dollars with Canadian basis. So we generally see some benefit in the wheat basis, soybean basis, et cetera. So the weakening Canadian dollar generally good for Canadian farmers. The strengthening U.S. dollar has the opposite effect on the U.S. Commodities, and hence why we may have seen some weakness in the US today. All right, we got lots of charts here to show you today, and I think there's actually quite a bit of interesting stuff that has happened in these charts in the last couple of days. Of course, we didn't record a video yesterday. I was away doing a talk with Civita International. They had me do a little bit of a soybean talk and outlook. We did talk quite a bit about soybean oil and its rise. It was holding support up until today. So today we saw a break of trend line support. That would be this blue line that we've been kind of watching for quite some time here. In one single day here today, we saw the soybean oil market correct below that trend line and below the 20-day moving average as well. So that spells a little bit of danger in the soybean oil market. It's one of those markets that has seen a significant amount of strength in the last little while. So it could be ripe for a correction. Of course, that would do some damage to the soybean market proper, as well as some of the rival oil seeds like palm oil and even um, canola, etc. So this is something we want to watch. Canola did fare pretty good today, though. There may have been a combination of uh, I know that there's some end of season heavy buying in the cash market. So we're seeing some premiums for canola for delivery inside of a certain window. So let's call it, before the end of August or something like that. So there is still demand in the cash market. I think that may be keeping canola futures elevated. The drop in the Canadian dollar would also be a big factor in keeping canola elevated. But for all intents and purposes, we should have seen larger losses in the canola today, based on the the performance of soybean oil. So we're going to keep an eye on that. Canola is bumping up against this kind of channel resistance here. It's had a hard time staying above that $700 mark as well. As you can see, the last week or so, it's kind of been tagging up above there, closing at or below that 700 area. So it is facing some pressure. At least it's hard. It's been hard to rally this market in the face of some of the other inputs. I just kind of wanted to show again the a bit of a shorter term view here of canola. Again, this last week it's been hovering right around the 20-day moving average. The 20-day moving average is now kind of hovering or starting to move lower. We haven't seen a real close above this trend line here either, and $700 even has been a bit of a resistance level. So today, we saw some big tails on this canola market. It did kind of move to a new low just above 680, but did recover into the end of the day. So it's hard to say, but it is outperforming a lot of the other markets, such as Euronext rapeseed. So we saw some big losses in Euronext rapeseed during the European session today. Broke down below a lot of the moving average, which have consolidated, signaling more of a neutral market. We haven't seen, we could still see this trade down to about the 470 euro per ton area. That's where this particular support lies from earlier in the month. But as you can see, the convergence here of the moving averages shows that we're still maybe in a bit of a neutral market. So we may see it bounce around a little bit. We'll have to wait till tomorrow and see. Here's the damage that has been done to soybeans. So yesterday, as I was giving a market update on soybeans, and in that market update, I was saying that we need to watch the $10 level on November, because it's both a bit of a psychological level as well as the support level from mid-July, when the markets kind of went down there before the rally in early July. And as you can see, when we broke through that $10 yesterday, there was a significant amount of follow-through selling. Today, that follow-through selling continued. We're now down at 989 and a quarter here in the November beans. And as I was saying, there is little to no support now until you get down to the 970 area. This is a seasonal time for soybean weakness, and there isn't a whole lot of fundamentals, particularly in the U.S. growing season, that are signaling that there is a problem with the soybean crop. Okay, moving into wheat here. This is hard red winter wheat. We've seen a couple of days of up days here. It hasn't broken above the 20-day moving average yet or anything like that. It's still trading very close to lows. In fact, yesterday, even though it was an up day, we did see another low. So it's hard to tell if this market is bottomed. I think we are in for a bit of a long haul here in the bottoming process of wheat. We may see it more saucer bottom than V bottom. And as a result, it may feel protracted or a bit of a protracted bottom in this market. Chicago wheat was also interesting today, as it did punch down to new lows below 520 on the futures here. September. So we have more open interest and volume in the September Kansas than more open interest and volume in the September for Chicago. So a bit of a difference there. This is the September. I always like to look at the charts with the most OI and volume. Um, and interestingly, it did punch down to new lows today, but did rally back above that support. So that may be a good sign. It may be a good sign of bottoming. We still haven't seen, big short positions that would suggest that this market needs short covering or anything. But you never know. We could be in for a bit of a rally back. December Minneapolis wheat continues to look terrible. It faded, a couple of days ago, we faded to new lows. It's continued to do that. Yesterday, we did punch a new low about 596. It did rally back to about 601 today. It is difficult to want to sell as a farmer. It's difficult to want to sell Minneapolis wheat down in these levels, particularly because the cash prices are about $1 a bushel off Canadianized from where they were or the highs that they were just a little while ago in June. So I think there's a lot of farmers that are holding off, which may help to support the price at this point. I don't like to see Minneapolis wheat with a 5 in front of it. It tends to feel undervalued at that point in time. There isn't necessarily any reason why spring wheat would be considered less valuable than some of the other classes at this point. So I think it's just out of favor right now. And if you did get some spring sales on that can carry you through fall, that would be the best case scenario, as it may, again, take a little bit of time for this market to bottom. Did kind of want to highlight here the spec position in Minneapolis wheat. It just recently in the last week turned into negative territory. So we may be seeing some technical selling in the Minneapolis wheat pit as well. Curious to see what that number is by the end of the day. Probably get closer to 20,000 contracts short. Again, even that wouldn't necessarily be down near these lows that we saw in May and April, but it is moving towards that area. We may not see the selling abate until we get into a position where we can take some profits or limit some risk in this marketplace. Here's December corn. Nothing really too interesting here. A couple of up days. We may see this trade up to the 20-day moving average if it's going to bounce. We've seen a series of lower highs here and lower lows. So I can't call this market finished on the bear side just yet. It looks like it will continue, particularly if it hits that 20-day moving average, that little red line here, and then reverses. I would be anticipating a new low then if that happened. Okay, cattle. So in my morning commentary today, which goes out to our premium subscribers, I talked about just the absolute veracity of the cattle markets today. They both were up significantly yesterday, and when they opened today, they just decided that it was over. And not to say that this is over for sure. Here's October live cattle. As you can see, we had a big down day today. We still have support here at the 20-day moving average, but we haven't seen a correction this deep in quite some time in this market. Back in May, I guess there was a kind of a gap here, but October wasn't the front month contract when that happened either. So, for all intents and purposes, this is a pretty big pullback. The biggest one we've seen in quite some time. Same thing with feeder cattle here. I will be watching that 20-day moving average there. It could, likely it will correct down to there, particularly if we've kind of gotten to the point where this market is a little frothy. But that's where we're at. So again, I've been saying this a lot. It'll be very hard to call a top in this market because there are fundamentals that do support rising prices. It will just be when the fundamentals and the supply match up, and that's when we'll see more weakness in the prices. That is all we have for you today. Thank you for joining us. We appreciate you watching. Make sure you click subscribe to make sure you're getting all of our videos. We will see you again tomorrow.